Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the New Zealand versus US dollar. Today's date is November 15, 2023. Yesterday, we saw the dollar move sharply to the downside after the CPI data, and in the New Zealand versus US dollar wasn't the exception. The price in the process moved above its 100-day moving average. That's a blue line in this chart, this overlaid line on the chart. We haven't been above the 200-day moving average since going back to the end of July, early August. So it's been a long time coming, and the price moved above that level. Also moved above the 38.2% retracement. That's of the move down from the high price that we saw in July to the low price that we saw in October, and getting above the 38.2% retracement after a trend move to the upside is always a minimum target that you need to get to and through if the buyers are to take more control. And indeed, the price did move higher. The problem is that the price ran into resistance. That resistance came against this swing area through here. We had a number of different swing lows and swing highs there, and then we came back up to that area right through here, found resistance sellers, and in trading yesterday or today, the price moved back up to that high of that swing area, and found resistance sellers. That area comes between 0.6046 and 0.60598, and as you can see, the price high came in probably around the 56 low or so before rotating back to the downside. Now that rotation to the downside has done something good here for the buyers at least, and that is holding the 100-day moving average. That 100-day moving average comes right around the 60 level, nice natural and round number for this currency pair. So being able to hold that level is somewhat important, or was somewhat important for the buyers and for the technicals to keep the bullish bias, and indeed it did. We also moved back above the 38.2% retracement at 0.6016, and that is another positive step. Currently trading at 0.6030. So the buyers are staying, in control in the shorter term here, and that is good news for them, as long as the price can remain above the 100-day moving average, and more and even more bullish would be staying above the 38.2% retracement. Now we could anticipate that the price would move back toward our swing area highs here between the 0.6046 and 0.60598. So overall, buyers are trying to stay in control in the New Zealand versus US dollar. We'll see if they can keep the momentum going and keep this price action moving to the upside. By the way, on a break of the 0.60598, we'll look for the 50% and the falling 200-day moving average. Those will be key targets as well on the top side. The price has not traded above the 200-day moving average since going back to July 27, 2023. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.